Welcome to the Fintech One-on-One podcast, episode number 304. This is your host, Peter Renton, chairman and co-founder of Lendit Fintech. Before we start this episode, I want to tell you about a brand new event from Lendit Fintech. Fintech Nexus, the Deal Makers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com. Today on the show, I'm delighted to welcome Kirill Bensonoff. He is the co-founder and head of product at New Silver. Now, New Silver is a really interesting company. They're a tech-forward fix and flip lender. They also have other lending products, but we're really focusing on the fix and flip space, but we're focusing on that combined with decentralized finance because they did the world's first DeFi real estate transaction earlier this year. And so I wanted to get Kirill on the show to talk about why go into DeFi, why be a trailblazer here, and how the mechanism works, how investors are able to participate, how they are able to really close millions of dollars in financing through DeFi. So we talk about how all that works, and he also provides what he thinks the future holds for DeFi and for New Silver. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Kirill.
Hey, Peter. Thanks for having me.
My pleasure. So let's get started with a little bit of background. I mean, you've been an entrepreneur for a while. Sounds like you've done a few different things. Why don't you give us some of the highlights to date?
Oh, yeah. I've done a few different things, that's for sure. So, like you said, I started, my first company was while I was in college. It was a web hosting company. That kind of got me started as an entrepreneur. I came to this country as a teenage immigrant with my parents, and certainly, like, always was interested in doing my own thing. So, that kind of lit the spark. And then, post college, I had a IT services company that focused on managed services. We're one of the first managed services companies in the area. And then out of that, we spun out a software company that was just a really young software startup that was acquired fairly early on. And then I had a couple other things in between. And what I'm involved with now is New Silver. New Silver is a loan originator in the fix and flip space, tech-forward loan originator. And we're doing a bunch of interesting things, I think, to make the lending process faster, easier, and less costly for everyone.
Right. So what was sort of the genesis behind New Silver? Can you tell us sort of what you saw and why it started up?
Absolutely. So I became familiar with fix and flip investing some years ago through a friend of mine, and I kind of always liked it. I mean, there is a great yield. It's secured by real assets. It brings value to real estate entrepreneurs who are basically very small businesses, individuals who come from trades, who come from various backgrounds, and who can essentially earn a very, very nice income if they put their minds to it. So I was very intrigued by what was going on there. And I was looking into it, and I looked at the technology initially, and I thought that the technology behind the lenders today was a little bit dated, a little bit subpar of what I've seen in the consumer lending world. And by the way, I had no experience in fintech, or little experience in fintech, and no experience in lending prior to New Silver, no formal experience. And so we approached it initially as a potential technology startup. But then, we thought, for various reasons, we thought that we could do a lot more being a lender ourselves. And there was a lot of very interesting things there. And so we decided to, build a product, test the product, and lend our own capital.
Okay, so maybe you could tell us a little bit about the breaking down the different types of loans you do and what are the loan terms, that sort of thing.
Sure, absolutely. So our bread and butter is the fix and flip loan. It's basically a bridge loan that's usually 12 months in duration, but it can go up to 24 months. And the purpose of the loan is for someone to buy a property, typically a residential, 1 through 4 family, but we do larger as well. That is in some condition that needs a rehab. Essentially acquire the property, rehab the property, and then resell it. So that's we do a majority of that. We lend for new fix and flip projects. We do refinances, and then we lend for ground up construction, which is very similar, except that either they're buying land or they already own land, or they're going to essentially demolish the house and build a new structure. And then we also do a 30-year rent loan. This is what's called in the industry a DSCR loan. It's kind of similar to what a bank would do for an investment property, except the difference is that it's an asset-based loan. So we don't really look at what the income, what the losses are in the individual or the company. We just look at the asset, make sure that it's the value is there, make sure that it's profitable, and then the loan can put up. That one we do in conjunction with a partner typically. So yeah, those are the four products that we have.
Right. Okay. And how have you funded these loans historically?
Yeah. So I mean, when we started the business, we learned that there was a lot of interesting dynamics. So we raised a little bit of capital, our own money, a little bit of friends and family types of capital, and we would essentially fund the loan with the capital, and then we developed a few partnerships, and then we would sell the loan off to one of these partners. And there's a number of companies out there that were aggregators essentially and buying up loans from originators like us, and then either securitizing them or doing something else with them with a bigger volume. So that was our model from the beginning.
Right. Okay. And we're going to get into the new model here in a little bit. But before we do that, I do want to just sort of get a little bit of your background. I know you've been interested in crypto for some time. So why don't you just tell us a little bit about what your interest is there, how long you've been following the crypto space and that sort of thing?
Yeah, so I learned about cryptocurrencies, I think back in 2013, and I actually bought Bitcoin. I remember I live in Massachusetts, and I went to Cambridge, and I think it was a student from MIT that I met, and we met online on a platform for these types of transactions. We met in person, and basically, I can't remember, 1 or 2 Bitcoin off of this person, and he transferred it to me in my wallet. I brought cash, so that was my first Bitcoin transaction. We met like a bar, and it was, it was like a little bit of a strange transaction, but it worked, and I was really interested in where this is all going, so I continued to pay attention. I wasn't really a big investor in crypto at the time. I mean, there wasn't really much available other than Bitcoin and other things coming out as well. But I've always kind of read news and kept an eye on it. I thought that there was some interesting dynamics there. And then 2017 or so, myself and the partner, we tried to do a startup in the crypto space, which didn't work out, unfortunately. But that kind of gave me, I guess, a closer hands-on view at the positives and the negatives that go on in the space. And so, I kind of continued on from there. But, after that, we started New Silver, and really, I continued to be interested in cryptocurrencies, but New Silver was not a cryptocurrency related business at the time. I mean, it still really isn't, but, we've introduced some components, which I'm sure we'll talk about.
Right. I do want to get into that. But maybe we can start that process by talking about decentralized finance, or DeFi, because this is really what we're really talking about here, is you sort of DeFi for real world assets. But did you sort of first hear about DeFi and think, we can take advantage of that? Or how did sort of the genesis come around with sort of the DeFi world and the hard money lending world?
Yeah. No, I thought there wasn't that specific thought, but when I learned about DeFi, I thought that at some point this is going to encompass other assets, real world assets, non-crypto assets. And, this was way before maybe 2017 or so. But I always thought that this was potentially a way to do some interesting financing. And I knew some folks in the industry, and I met some folks at MakerDAO around that time, and we started talking about what can be done, and they're interested in exploring. And so that kind of sort of started the conversation way back then.
Right. Maybe you could explain for the audience what exactly MakerDAO is, and also its token DAI, which is part of how you're gathering investment capital. But explain just what MakerDAO is.
Sure. MakerDAO, DAO stands for Decentralized Autonomous Organization. So it's really not a company or an entity of any sort. They did have a foundation, but I believe, have dissolved it recently. So it's really a truly decentralized entity that at its core, what it does is it takes in, the way they started out is they would take Ether as collateral and they would lock it into what they call a vault. And out of that collateral, they would issue a stable coin called DAI. And a stable coin has two or probably more flavors. The most common flavor today is a collateral-backed stable coin like USDC or Tether or USDT or a number of others. And what they do is they essentially take in collateral in fiat currency, US dollars or what have you, and then issue a one-to-one stable coin backed by that collateral. So in theory, if you have one USDC, you can go to Circle and then trade that one USDC for $1. So that keeps it on par with dollars. Now, DAI and MakerDAO are, I believe, super innovative. And I think what they've done is as close to genius as it gets, in my opinion. So they've developed an algorithmic, non-collateral based stablecoin. They take collateral and then they issue DAI, that's at like 50% or some amount of loan to value. And then they get paid an interest rate, a small interest rate. And because of the whole ecosystem that exists, and there's a lot of things I don't know. I don't put myself out as a preeminent MakerDAO expert, but they've built up a fairly large ecosystem, and they've got a lot of a fair amount of collateral. It's in the tens of billions. I haven't looked recently, and I think there's like 4 billion DAI out there. And because of the arbitrageurs and other folks involved, and the trust that's placed in this organization, DAI mimics or stays very, very close to being one-to-one with US dollar. And they've lost this peg to dollar a couple of times in these, super liquid events that took place over the years, but it quickly recovered and they've handled all the issues very, very well. So it's one of the largest market cap stable coins, and it's not backed by fiat currency.
Right. So then why did you decide to sort of go this route where you can, you're really putting, and we'll get into the details of it in a sec, but what was in it for you? Why did you decide to go to all this work and all this trouble to fund these loans through DeFi?
Yeah, that's a great question. I think the short answer is because I believe that's the future in some way or another. I don't know if it'll be DAI or it'll be something else, but I believe that. And not that fiat and the sort of traditional financing will go away. I do think that the two are merging, are going to continue to merge. But I thought that it took us a lot of work, and it still continues to be a ton of work to utilize this ecosystem. It's not as easy in a lot of ways compared to what we had done before. It may not be as easy as it would be to go to like a bank or a fund and get financing and funds are in your bank, because we work with fiat currency with our borrowers. But what I envision happening, at some point, and maybe sooner than later, is that this is going to allow us to do a lot more automation, right? So we hopefully soon will be able to originate a loan and then essentially, pledge the collateral and get the loan from Tinlake, from MakerDAO in essence, and potentially other investors very, very quickly. I also envision the transparency of the whole process will greatly be improved by it being on the blockchain. So in not too distant of a future, you will be able to open. So our loans are basically an NFT. They're a blockchain asset in the form of an NFT. You'll be able to look at this NFT and maybe learn about how this loan is performing. Maybe learn about what the yield has been, what it's going to be, et cetera, and then maybe this loan could be transferred to another party or a third party, right? So I do believe this is going to make everything a lot faster, a lot more transparent, and it'll be more convenient for everyone.
Right. That is the potential. So let's talk about sort of the mechanisms that you funded this loan via. I mean, I know that I have a MetaMask wallet and I'm on Centrifuge right now, and I'm actually looking at your New Silver 2 deal here. So maybe explain, I mean, you decided to put this on Centrifuge, and I will link to all this in the show notes. But what sort of the pool, what was involved in the pool, and how it sort of got onto Centrifuge and got funded?
Yeah, so the centrifuge folks are a group of very smart people, and they've developed the software that basically seeks to bring real world assets to the blockchain. And so they've developed a product called TinLake, which enables their asset originators, we're one of them, to take a loan that we had closed, in real world, and turn that into an NFT, turn it into a blockchain asset. And that NFT, and there's a legal side, the traditional legal side to it as well. It's not just blockchain at this time, but perhaps eventually it will be. So in this NFT represents the collateral, it represents a loan, which then gets locked into TinLake, and then out of that, either people or entities, like, again, entities loosely, but MakerDAO, decentralized entity, perhaps others in the future, can participate and essentially invest DAI. And there's a couple different ways to invest. They have a senior tranche called Drop, so that the senior tranche has more protection, more funds in front of it, and it pays a fixed interest rate. And then there's a junior tranche called TIN, which is a separate tranche, much riskier of an investment, and that pays a variable interest rate. So people can go to TinLake, and then they can, if they choose to invest, they can invest into one of these tranches. They invest in a whole pool, not a particular loan. And then, there's a whole bunch of other stuff there. But at the end of the day, we pledge the collateral as the asset originator, and then we can get a loan from TinLake, which can consist of the MakerDAO funds plus some funds that individual investors can contribute.
Right. And I'm looking at it right now, and that you had this was an offering that seemed like it was 5 million DAI, 5,000 DAI, which is basically $5,000 minimum investment. And I noticed that you reduced the APR. It was, I think, at 5%, and now it's at 4%. So tell us a little bit about what happened there.
Yeah, I think the reason for that is there's quite a lot of demand. I mean, we've got right now the pool is closed, it's oversubscribed, so we're not taking on new investors right this moment. So there's so much demand out there, and the reason for that is that we wanted to be able to reduce the rates that we originate at, that we offer to our borrowers, to basically bring forward the best borrowers, to increase origination volumes, and then in turn put lock the collateral into TinLake, and have a little bit of room to play with there. And so reducing the drop rate helps that a little bit. I don't think this is going to be a permanent reduction by any means. On top of the interest rate, Centrifuge also has reward tokens that they pay out to all of the investors that invest in either tranche, and they reward everyone for participating in the ecosystem.
Right. And so this offering is closed, and we're recording this on June 8th. This is going to be published on June 18th. And so you said there is going to be another series that you're going to put on Centrifuge?
It may be another series, or maybe the same series that we'll just open up. But yeah, we expect to open the pool up in the next couple of weeks again. And we're going to be working with MakerDAO hopefully soon to increase the debt ceiling. So right now we have 5 million that MakerDAO has essentially capped the maximum line of credit, if you want to call it that, at. So we hope to, as over time, as we originate and the relationship gets stronger, we hope to ask the community for an increase. Right.
Okay. And then inside the pool, it says like there's 28 different assets, average financing amount 232,000 DAI, and average maturity at 12.4. I mean, these sort of a pretty typical fix and flip type loans you've got in here.
Exactly. Yeah, we focus on sort of the middle of the road fix and flip projects. We try not to go too high or too low. The overarching thesis here is that people need places to live in. There's a short supply of housing stock, but even if there's not, the housing stock in a lot of areas is outdated and has been built 100 plus years ago in many areas. And so the fix and flip community has a huge part to play in revamping these homes and making them livable, and at the same time earning an income while doing it.
Right.
So those are the typical loans, correct?
Right. Okay. So then can you explain how the cash flow works? I mean, I know there's other platforms out there that I know that there'll probably several listeners have invested in. We just recently had Lending Home on the show, and often with those investments, you typically often get like a small interest payment every month, and then the balloon when the maturity comes in. I mean, how are the cash flows work in this system?
Yeah, it's a little bit different because when Centrifuge built the system, they, I think, tried to get as close to decentralized finance as possible. It's not always possible with these real world assets, but the way that it would work is if an investor invested capital, whether it's if it's in a senior tranche drop, they could then, there's not a steady payment per se, but the drop they invest in, let's say they buy, I don't know, 5,000 drop and it's one die each, right? By the time, and they keep it there for, I don't know, X amount of months. So this drop will appreciate in value. So it's more of a net asset value calculation, right? So then when they redeem, because a drop is actually a token, so everybody would need to have a MetaMask or some kind of a wallet to do these transactions. So and then obviously DAI. So I can actually walk through the whole process. I mean, if you have a wallet like MetaMask, you'd want to seed it with some DAI. And then if you go to TinLake, you can essentially buy drop tokens. And then DAI would go to TinLake, and then you would get the drop token into your wallet. And then if you come back, let's say some number of months later, you will, the drop should appreciate as the net asset value changes based on the fixed interest rate. So, a year from now, it should cost, $1 plus 4%, so $1.04. I mean, it's not a simple appreciation. It will probably be a little bit more than that, but based on the interest rate, it would appreciate. So when you redeem it, you would get more DAI back. That's the idea.
Right. Yeah, and actually, as we've been talking here, I've been looking, and the DAI is appreciating in real time in your drop tranche value.
That's right. That's right. That's another nice thing about it, is that it's actually real time. It's basically built to calculate up to, I think it's some number of seconds that it changes.
So can investors are you locked in till maturity? Can you sort of sell these tokens at any time, or how does that work?
You can sell them at any time, but of course, there should be enough capital to pull out your investment. So it depends on what's available in TinLake. It depends on what, if they're the maker line is open, drop investors may be able to pull out of there. Yeah, it depends on those factors. So I think for the junior tranche, the expectation is that they will hold the investment for a little bit longer. But for senior, for the drop tokens, which is what the majority of people are investing in, they can buy and sell fairly frequently. And we've already seen many of both transactions take place.
Okay, that's interesting. So this is all run by Centrifuge. And I should actually note too, listeners will know that Jason Jones, one of the co-founders of Lend at Fintech, he is very involved in Centrifuge, and he's sort of the one that introduced us, Kirill. So I want to give him a shout out.
Yeah, Jason.
Yeah, and so I'm just not is Centrifuge. I'm just trying to sort of put it into traditional asset sort of world where people can understand, this is on the Centrifuge platform on TinLake, and are they kind of like the asset manager, or how do you what would you call Centrifuge, using an example from traditional finance?
I don't know, actually. I'm not a finance guy, but I mean they're the technology that enables the securitization, if you will. I mean, it's probably as close to that as
right.
Anything else.
Yeah, it obviously has a lot in common with a traditional securitization. You've got a junior tranche and a senior tranche. Junior tranche is potentially higher risk and higher reward, which is obviously very similar to traditional securitization. Okay, so then, what are the economics for New Silver here? How are you getting paid?
Sure. I mean, so when we originate a loan, there's an origination fee typically that's involved. So we keep the origination fee. And then when we finance the loan with TinLake, there's typically a spread that we also keep. So it's pretty similar to, essentially how we've worked with our previous partners. So when, the people that do the loan aggregation, note buyers, they buy the note, they typically buy it with a yield spread attached that either they pay up front or they pay as they get paid. And in this model here, we have a yield spread, and it's basically we earn it as the borrower pays us, and then we pay TinLake.
Right. So is your intention to have your cost of capital here be lower than your cost of capital elsewhere, so you can really pass on better rates? Is
That's the goal. I think that, but like I said, I think cost of capital, it would certainly be nice to have the cheapest cost of capital out there. But whether or not this is feasible, I don't know. I mean, right now, I think it's not much less than it would be with the partners that we worked with before. However, I do think it could decrease further over time, but also the fact that we can automate, because we're building a tech forward lender. So I think for us to be able to automate a lot of these transactions, I mean, that could mean we could, we don't need to have a capital markets person, or, we don't
right?
need all these people doing, manual tasks. So that's huge.
Yep. No, I can see that. That is huge. And I remember when this came out, I think it was in April, if I remember rightly, and I watched a video on CoinDesk, and they had the MakerDAO guy on saying this was the world's first ever real estate transaction conducted through DeFi, and they were making quite a big deal out of it. So I guess, I mean, you are a pioneer here, but what's the long game when it comes to DeFi and New Silver? Do you hope to be able to, and obviously you talked about automation, which obviously is it's going to be a great benefit, because this is all DeFi, all happens without human intervention. But is your goal to have all of your loans be funded through a DeFi platform in the long run?
Yeah, absolutely. We're all in on DeFi, on Tinlake, Maker. We would love to have, be able to originate loans and make them as transparent as possible, so that everyone knows exactly what the status of each loan is, project, et cetera. And we're working towards that now. And, that all of our loans go to DeFi.
Right. Okay. Well, before we close, I do want to just ask you about your angel investments, because I've seen that you're quite a prolific angel investor. And so maybe you could just tell us what kind of projects that you're interested in funding.
Absolutely. So, I mean, yeah, I look at different types of projects, to be honest. I started out thinking more about enterprise IT and SaaS when I was in that game, and knew a lot about it, knew kind of the updated state of affairs in that marketplace. And I still do to some degree, but obviously lately I've been looking at fintech a lot more. I am one of the founding members of an angel group called Chain Reaction, which is started out in Boston, but I think we have members from a bunch of different areas now. So it's a group of investors. We get, 3 to 5 companies pitching after a process. They pitch us every month, and then, we can make investments individually or as a group or however. So I'm fairly active there, and have a network of people trying to pitch me all the time. So I don't have too much time for it, to be honest, but
right.
Really interesting projects come up. So it's a lot of fun.
Right. Yeah, for sure. Okay, well, we'll have to leave it there, Kirill. I really appreciate you coming on the show. Best of luck with the future of New Silver and DeFi.
Awesome, Peter. Thanks for having me.
Okay, see ya. In some ways, I'm reminded of the early days of peer-to-peer lending, sort of the example here of DeFi just really getting going in this space. But, peer-to-peer lending got going. There were some early adopters like myself who were willing to risk their money in something that did not have a long track record, was all pretty new. And clearly, DeFi is still pretty new, and particularly DeFi for real-world assets like we have here is brand new. And, it sounds like, as Kirill said, this was an oversubscribed offering. People are willing to give this a try. And who knows, we could very well have this be a major part of finance in the long term. It has to start somewhere, and really it's starting right here with New Silver and Centrifuge, and that is something that I'll be paying attention to closely. I'm going to actually try and participate in a future offering that they have, and we'll be bringing you more and paying attention to this new trend as time goes on. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Before we go, I want to remind you about the brand new event from Lended Fintech. Fintech Nexus, the Dealmakers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com.